I'm Richard. On MASTERICH, Bitcoin's leaning into a classic shoulder shrug morning, coiling just beneath a well-watched ceiling while the macro tape stays quiet. Bitcoin. Strip Bitcoin spot around $108,592 per coin. CME front month futures near $111,400. The US dollar index hovering in the high 97 handle, and the 10-year U.S. Treasury yield near 4.25% as of the prior close with U.S. cash markets on holiday. Bitcoin today, price. Context. Driver spot is little changed to fractionally higher versus the prior session, up roughly 0.2%. With an intraday band so far between roughly 107,283 and 109,846. The price action reflects a softer dollar tone and steady nominal yields into a U.S. holiday, which tends to thin liquidity and amplify small flows. On rolling lookbacks, 7-day returns are modestly negative and the 30-day change is lower as well, consistent with a cool-off after August's run into record territory. The broader year-over-year frame remains constructive. Microstructure and derivatives. What's under the hood? Perpetuals funding across major venues sits around a mild positive, call it plus 0.01%, signaling a slight long tilt, but nothing resembling crowded leverage. That generally aligns with a shallow, forward-leaning contango. Unregulated futures, CME front months trade a touch above spot, consistent with balanced positioning and modest carry. In practical terms, that means directional follow-through is unlikely to come from derivatives alone unless funding drifts higher for several sessions or basis steepens on a pickup in demand. Flows U.S. Spot ETF Pulse Check. The latest read on daily U.S. spot ETF activity into the final days of August shows a stop-start pattern, small inflows alternating with outflows, and a net picture that has cooled from mid-month peaks. Aggregate trackers of the complex show the recent week leaning mixed, with individual funds offsetting one another rather than rowing in the same direction. For price, that means the 110,000 area tends to reject when flows are neutral to negative, and opens quickly when flows synchronize positive. The signal to watch here is not a single fund, but whether the sum of parts turns decisively green again. Session context holiday. Dollar. And rates, U.S. markets. Observe Labor Day today, which typically mutes cash session liquidity and shifts attention to overseas leads and the dollar. The dollar index sits in the high 97s, and the 10-year U.S. Treasury yield is hovering just above 4.25% on last print. Both have eased from recent highs as traders look to the week's jobs data and the next FOMC meeting. A further drift lower in the dollar would be a near-term tailwind for crypto beta, a push higher in yields toward 4.5%. By contrast, tends to sap risk appetite at the margin. Technicals and levels map before market. The spot trend structure shows price below the 50-day, but comfortably above the 200-day moving average. A mid-trend digestion rather than a full trend reversal. Immediate resistance remains the round 110,000 handle, and then the mid-100 teens where the 50-day cluster sits. Above there, supply zones near prior distribution. Highs return to view. Immediate support is the morning's floor near 107,000. Below that, a shelf spanning roughly 104,000 to 105,000 has acted as demand on prior dips. A decisive daily close above 110,000 would put the 50-day retest in play. A clean break and hold below 107,000 would likely invite a run at that shelf. Tape tells highs, lows, and participation. Today's intraday high and low sketch, a tight coil versus last week's wider ranges. a hallmark of holiday conditions. In that environment, it's sensible to respect the first hour's high-low range once U.S. futures participants return, and to fade moves that lack volume follow-through. If spot can reclaim and hold the 110,000 figure through the U.S. after hours, the probability of a stop-driven extension into the mid-100 teens increases meaningfully. Failure there and a slide back into the 107,000s would keep the chop intact. CME, Quest basis. Term structure. And who's in charge? Front-month CME futures sit modestly above spot, with the next-out contract carrying a similar slight premium. That term structure is consistent with a market that is neither panicked nor exuberant. Watch for basis to steepen if ETF inflows reaccelerate and dollar softness persists. That combination often precedes trend extensions. Conversely, a flat or inverted curve alongside negative ETF prints would warn that risk takers are stepping back. Seasonality and near-term narrative. September has a reputation for being a trickier month for Bitcoin, and the market enters it with a few bruises from late August volatility. Historical composites of monthly performance skew modestly negative for September, though dispersion is wide and macro context matters. What flips the script in-month tends to be either a policy surprise or a synchronized positive flow regime across spot, ETF, and futures. Keep that in mind before leaning too hard on seasonals alone. What moves us next? Catalysts on deck. The immediate calendar focus is the U.S. labor market, read later this week, which will shape the rate cut odds into September's FOMC. Crypto trades the dollar and real rates when macro is in the driver's seat. A softer payrolls print that leans dovish on policy would typically support a weaker dollar and firmer crypto beta. With U.S. cash markets shut today, overseas equities and the dollar will likely dictate the day's tone. Scenarios conditional. Not advice. Bull case Bitcoin reclaims and holds the 110,000 level on a daily close as ETF prints turn decisively positive and the dollar drifts lower. That unlocks a push into the 50-day cluster in the mid-100 teens. Acceptance above there opens a path back toward prior distribution highs. The trigger to watch is not just price. Look for a day where ETF net flow, perpetuals funding, and CME basis all lean bullish together. Base case, range and digestion between roughly 107,000 and 110,000 as funding stays contained. Basis remains shallow, and macro cues are non-directional. Intraday, that favors fading spikes toward the edges of the band and reassessing if flows shift. A resolution likely awaits either a macro jolt or a synchronized flow impulse. Bear case, a daily close below 107,000, paired with a soft day for ETF flows and a firmer dollar, likely tests the 104,000 to 105,000 support shelf. A loss of that zone would hand initiative to sellers and raise risk of a deeper pullback toward the high 90,000s, where longer-term averages and round-number psychology converge. Risk notes and positioning principles. First, respect liquidity. Holiday sessions and thin books can create false breaks. Insist on confirmation via closing levels and participation. Second, triangulate your view price structure. Flow data and macro all need at least 2 out of 3 alignment for high conviction risk. Third, avoid leverage creep when funding holds positive for several sessions. Carry can compound against longs even as spot goes sideways. Finally, define invalidation before entry, above 110,000 for upside continuation, below 107,000 for downside risk, and keep size proportional to volatility. Positioning checklist for today's U.S. after hours. 1. Mark the opening range once major venues fully spin up, and note whether spot leads futures or vice versa. 2. Track ETF flow tallies, as they print one strong synchronized day across the complex. Often precedes multi-day momentum. 3. Watch the dollar index around the mid-97 handle. A slip toward the mid-97s boosts beta, while a bounce toward 98 takes some air out of rallies. 4. Monitor CME basis steepening, with rising prices constructive. Flattening on rallies is a caution. Broader frame where this sits in the cycle, even with August stumbles. The 12-month view shows Bitcoin materially higher than a year ago, and the 6-month look-back still speaks to a constructive primary uptrend. That does not inoculate the market from deeper retracements. It does suggest that dips into higher time frame demand have found buyers. The path of least resistance will be set, not just by price momentum, but by whether the asset continues to attract net new demand via regulated wrappers, and whether macro stays permissive via a gentler dollar and capped real yields. Key levels. Quick reference. Resistance, 110,000. Then the mid-100 teens, near the 50-day cluster. Support, 107,000. Then, 104,000 to 105,000. Invalidation, daily close beyond either boundary with confirming flows. No hero trades inside the chop. What I'm watching, into the weak dollar. A grind lower toward the mid-97s improves crypto breadth. A reversal, higher stiffens headwinds. Rates. The 10-year U.S. Treasury yield near the low 4% range is manageable. A spike back toward 4.5% would be a warning shot. Flows. A synchronized positive print across the big ETFs on any down dollar day would likely be the tell for a break of the figure. Structure. If price accepts above the 110,000s, watch how quickly it rotates into the mid-100 teens. If it stalls, the market is still distributing. Implementation notes. General. Scale entries, rather than going all in at single levels. The first tag of resistance often rejects. The second test is more revealing. Use mechanical stops that live outside obvious liquidity pools to reduce whipsaw risk. Consider anchoring risk per trade to a small fraction of account value during holiday weeks. Then, reassessing size as liquidity normalizes. For those using futures, keep an eye on margin requirements and the impact of basis on synthetic carry. A small positive basis can be an ally for patient longs, but it becomes a drag if spot chops and fees accumulate. As we kick off September, Bitcoin sits at a fulcrum, the 110,000 figure above, the 107,000 shelf below, and macro inputs, quiet for the day. If the dollar continues to soften and flows, click positive. The path toward the mid-100 teens is open. If not, expect more two-sided chop inside the range. I'll stay on the levels and the flows for you through the U.S. after hours here on MASTERICH.